Buying a home, it's a huge deal, right? For a lot of people, it's the cornerstone of the American dream. But the actual process of getting the keys, wow, it can feel like a maze of complicated rules and regulations. Ever stop and think, why are all these rules even here? Well, they didn't just pop up out of thin air. In this explainer, we're going to break down the essential protections you have as a home buyer, and we'll trace them all the way back to a history of some pretty unfair practices they were created to fix. So here's our game plan. First, we're going to dive into housing's discriminatory past, because you really have to understand the problem to appreciate the solution. Then we'll look at the first big laws that were designed to make lending fair. After that, we'll see how the 2008 financial crisis basically forced a modern overhaul of the whole system. We'll also cover what your right to be informed actually means in practice. And finally, we'll wrap it all up and talk about what this all means for you. All right, let's get into it. To really get why today's home buying laws are so incredibly critical, we have to rewind the clock. You see, the foundation of our housing system, well, it wasn't exactly built on a level playing field. And those injustices from the past are precisely why the protections we have today exist. A prime example of this is a practice called redlining, and it's pretty much what it sounds like. Imagine someone taking a city map and literally drawing red lines around certain neighborhoods, often based entirely on the race or ethnicity of the people who lived there. If you were inside that red line, getting a mortgage was next to impossible. And this didn't just deny people a house, it denied them the #1 way families build wealth for future generations. Those economic gaps, they're still being felt today. And then there's the toxic flip side of that coin, reverse redlining. So instead of just denying services, predatory lenders would aggressively target these exact same communities. They'd push these expensive, high-risk, completely unsustainable loans onto the most vulnerable consumers. It was a financial trap, set up for failure from the very beginning. Then you had blockbusting. This was a purely for-profit tactic designed to stir up racial fears. Real estate agents would go to white homeowners and spread rumors that minority families were about to move in, trying to create a panic so they'd sell their houses at a loss. Then, those agents would turn around and sell the very same homes to families of color at inflated prices. They were literally profiting from manufactured panic. And rounding all of this out is a practice called steering. This is when real estate professionals would, steer people. They would guide potential homebuyers either towards or away from certain neighborhoods based entirely on their race or ethnicity. This tactic wasn't just limiting people's choices, it was a powerful tool for enforcing and maintaining segregation. So in direct response to these deeply, deeply unfair practices, Congress finally started to act. This is what led to the first major wave of fair lending laws, which built that foundational layer of protection for every homebuyer. And this created two major pillars of fair lending law. First, you have the Fair Housing Act, which bans discrimination in the actual sale or rental of a home. Then there's the Equal Credit Opportunity Act, or ECOA, which makes sure there's fairness when you're trying to get the loan. You can see there's a lot of overlap here, but notice how ECOA adds other key things, like your marital status or age. Together, they form a pretty comprehensive shield. But even with these laws in place, those predatory practices didn't just go away. They just evolved. And they became a massive factor in the 2008 financial crisis, which was basically fueled by millions of these unsustainable loans. That crash exposed huge gaps in consumer protection, and frankly, it triggered a massive regulatory overhaul. It's actually why the Consumer Financial Protection Bureau, or CFPB, was created. Now, a cornerstone of that overhaul is the ability to repay rule. It's really just common sense written into law. It says that before a lender can give you a mortgage, they have to make a reasonable, good faith effort to figure out if you can actually afford to pay it back. They do this by verifying these 8 key financial factors: your income, your job, your other debts, the whole shebang. The goal is to make sure you aren't being set up to fail. And to encourage safer lending, regulators created a special category of loans called qualified mortgages, or QMs. Think of a QM as a loan that has safety features built right in. It avoids risky terms like interest-only periods or those huge balloon payments that could suddenly make your monthly bills skyrocket. And when lenders make a QM loan, they get a safe harbor, a legal presumption that they followed the ability to repay rule, which gives them a real incentive to offer you stable, predictable products. So, we have laws against discrimination and we have rules for safe lending. But how does that actually translate into practical tools for you, the borrower? Well, the key word is transparency. These regulations mandate that you have the right to be fully informed every single step of the way. Which leads to the essential question every single home buyer asks. You see an advertised interest rate over here and another one over there. But what is the real cost of the loan? How can you actually make a true apples-to-apples comparison between different lenders and different offers? The answer is the APR, the annual percentage rate. The APR is your best friend in this process because it's so much more than just the interest rate. It bundles in other lender fees, things like origination fees and mortgage insurance, to reflect the total cost of credit. That makes it the single best tool you have for comparing different loan offers. And this brings us to an incredibly powerful protection: zero tolerance. It's a fantastic rule. Once you get your official loan estimate, certain key fees, the ones you pay to the lender or the broker, are legally locked in. That number you see cannot change. It cannot increase by a single dollar when you get to the closing table. No last-minute surprises. Okay, let's pull all of this together. We've gone from a history of discrimination all the way to the modern rules of the road. Let's really outline your key rights as a borrower in today's market. These are your fundamental rights. You have the right to be treated fairly and not be discriminated against. That's thanks to the Fair Housing Act and ECOA. You have the right to get clear, timely information with the loan estimate and closing disclosure forms. You have the right to know the true cost of your loan, and you do that through the APR. Crucially, you have the right to a loan you actually have the ability to repay, as mandated by that ability to repay rule. And you have the right to see the appraisal that determines your home's value. And it's so important to know that these rights have real teeth. The SAFA Act, which created national licensing standards for mortgage loan originators, gives state regulators actual enforcement power. They can impose some serious civil penalties, up to $25,000 per violation, which ensures that the people originating your loan are in fact following the rules. So, the laws we've talked about have built this really critical foundation. They've put up guardrails to steer the industry away from the discriminatory and predatory practices of the past. But, progress is an ongoing journey, and that leaves us with a final, thought-provoking question to consider. With these rules creating a foundation of fairness, what is the next frontier for ensuring equal access to homeownership?